Crude oil dipping below $49 on Thursday, but stocks managing to hold up. Welcome to Trading Nation. I'm Eric Chemi. Today we've got Ari Wald from Oppenheimer and Max Wolff with 55 Capital. Ari, let's start with you. You see these moves with oil and stocks. What do you think the right play is for traders out there?
Yeah, well, regarding the implications for the stock market, I'm not very concerned about this. In fact, I think for the long run, this could be quite positive. If you look back through history, when the crude oil's 52-week rate of change, measuring it that way, the time you got to get concerned is actually when crude's very high. We looked at the forward performance, that the worst forward performance is when crude's high, not when it's low. And we kind of think about it like this. You know, to get your economic bust, you need to have your economic boom. And to use the price of crude oil as your proxy for economic growth, we're really not close to that. We haven't seen that type of run up in the economy and in oil prices. So if anything, how we see it, this more recent downturn, if anything, kind of pushing off that potential top in the market. And I think it's removing what was a potential headwind. And I think in general, overall, you know, stocks, aside from those tied, of course, to oil prices, should continue to do well.
Max, what do you think about that? He's not concerned. Are you concerned?
Yeah, so I would say I sort of see it a little bit differently. I think that basically we've seen stocks not trade macro fundamentals. So we're up basically 3x off the bottom. The economy has been sort of lackluster, so stocks have way outperformed the economy. Therefore, I find it a little bit harder to take solace saying, hey, the economy looks okay, so stocks can't come down. If they could go up without the economy, my guess is they could probably head the other way, you know, in that scenario as well. To the oil situation, I do think, though, I would agree that I don't know how closely correlated it is. There's an old saying, right, copper is a good economist, at least better than the real economists often. And there's still some value to commodity price direction on that front. We do think, though, that the oil business has a little bit to do with deregulating and a sort of potential spike in supply coming online in the U.S. And I think we think short-term it has a lot, or I think short-term has a lot to do with what looks like a likely raise in rates, and that's going to push up the dollar, and it's going to put some commodity pressure on top of the weakening China story, which is pressuring the commodities. So different drivers in place here, but I do think there's cause for concern in the longer run.
All right, I got to bring it back to you. Obviously, you heard what Max says. He thinks oil may be a, regulation, supply side type of move, and maybe it's not going to connect that much to the stocks. What do you think about that?
Well, I agree with his outlook on the commodity market, and of course with the tie into the U.S. dollar, we think the dollar continues to grind higher and does put that pressure on commodity prices, and they trade very similar to how they traded in the 1950s into the 1960s, as well as the 1980s into the 1990s. They're going to be range bound, we think, much like they were in those prior periods. If you look back then, those sideways range bound commodity markets also coincided with a secular bull market in the S&P 500. That's the environment we think we're in. We think this is going to be positive for stocks.
All right, well, we're going to have to leave it there. Max, Ari, thanks to both of you for coming on here on Trading Nation. So love to have you back next time. We'll see what happens with those oil prices. And thanks for everyone who's watching. We'll catch you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.